Good afternoon, and welcome to the Boring Millionaire podcast. Today is Monday, August 11th, and in this episode, I'm going to discuss how you can invest in the stock market with any budget and what 5 stocks I'm buying this week and why. So, how is it that you can invest with any budget? You could take whatever amount of money is feasible for you and feasible for your budget, and then take that and break it into 5 evenly spaced increments and put those 5 different increments into the stock market. Now, each week I do give 5 picks that I'm putting my money into, and I believe splitting your money up into that fashion is a good way to get access to the market at any budget. So let's say you could take $50 a week. You could break that $50 into 5 $10 increments and put it into the 5 different companies. Or if you have a little bit stronger of a budget, you could take $200 and put $40 into the 5 different companies. It's a method of investing that if you stick to it, no matter what your budget is, you will build a strong stock portfolio. And as long as you're investing in the right assets and securities, you will have that portfolio bring you to a better financial future for you and your family. So let's take $50. We're going to take that $50 and we're going to break it into 5 $10 increments. Now, with a $10 increment, if you're buying a $200 stock, you're only getting 0.05 of a share, which on the surface level doesn't really sound like much, but you are investing that money into that company. And sticking with a disciplined investment strategy like that over a longer course of time, as you continue to put money into these companies and as these companies continue to appreciate, which means grow in value over time, you will see that $10 over and over again growing into a bigger snowball of money for you for your better financial future. So it's accessible with any budget. It's feasible in any fashion. And I'm a big believer that no matter what your budget is, as long as you're putting money into the market consistently, you will see that better financial future. So what stocks am I buying this week? The first stock I'm going to buy this week is JP Morgan. JP Morgan is the leader in investment banking. And earlier in the summer, they put out a great earnings report that has been sending them on a tear higher. On this tear higher, they are seeing a little bit of a breather right now. They're sitting right at their 3-month average. And with that, I'm a buyer of the stock. I would also like to say JP Morgan pays a 1.94% dividend. So what a dividend is it's money that these companies pay you just for holding the shares. So not only are you making money as it grows over time, but you're also getting paid every 3 months by the company itself. So JP Morgan is a great asset to be buying this week. And the next stock I'm buying this week is Carvana. So Carvana also put out their earnings report about a week and a half ago. It was a great earnings report, and the stock did pop after that initial report. But following it in the week and a half after, it has been returning to the price that it was prior to the earnings report. So the fact that it's meeting that same price and the 3-month average is meeting it, I do think that creates a signal to buy the stock. I do think after hanging out at this 3-month average at a $345 price, we are going to see it tick upward and it will begin to grow higher in price than where it is now. The earnings report was stellar. They're absolutely killing it as far as a company. So I do think in time, the stock is going to represent that. And I do think that there's a lot of sell-off in the stock, given that it's had such a strong run over the past 3 years. There's a lot of people who have been invested in it since, let's say, $10, $20, even $50. And now that it is appreciated a long way since then, I do think there's a lot of people exiting their positions and selling the stock, giving it that back to earth price that we're seeing. But I do think over time it will continue to trend higher as it is a leader in its industry. The third stock I'm picking this week is Stryker. So Stryker makes all the products and equipments for hospitals, healthcare facilities, and doctors' offices alike. They are the leader in making these products, and with that, they will always be fulfilling their contracts by supplying the hospitals and everything of that nature. They make hospital beds, they make syringes, medical tapes, anything that you could think of that you would see in a doctor's office or even a hospital. They are the ones manufacturing it, and for those reasons, I am a buyer of this stock. They will always be in business. They will not ever, find a moment in time where they're not a necessity to the world that we live in. And that alone is a good enough reason to be investing in the stock. I love to buy and invest in stocks that are a staple to the world that we live in, They mold the world that we live in and our day-to-day lives. And being that hospitals will always be a necessity, if they're filling the needs of hospitals, that is enough of a reason to want to be invested in the stock. So they also pay just under a 1% dividend. So I just want to shine light on the dividend again. By owning these shares and being invested in these companies, you're getting paid an income just for being invested in the market. So not only are you getting it on the uptrend, you're getting paid that silent background income for being involved in the market. The fourth stock I'm picking this week is PNC. So I am going with another bank. Typically, I don't like to put so much money into one space, but JP Morgan and PNC are both great in their fields. They're both industry leaders, and PNC is presenting a great discount where it is right now. It's sitting at its old highs, and I've always been a great believer that when a stock falls to its previous highs, it's just creating a new low. So I do think this is the lowest that PNC is going to be trading at. It is trading at both its 3-month and its 1-year average. So again, the nerdy stock chart stuff that I always look at is telling me now is a great time to be buying this stock. And speaking of dividends, it also pays a 3.5% dividend. So the market average is 1.25. So you're almost tripling the market average as far as dividend income. So a great asset to be buying, as well as a great time to be buying this stock. And the fifth stock I'm buying this week is Travelers Insurance. I do like to add some clarity. Travelers is the name of the company. It's not insurance for traveling. It's Travelers, as it would be Geico. But this company is Travelers. They've always been a sleeper stock. It's a very, very boring and slow-moving stock, but it is one that'll give you a certainty in the market and will always be trending higher. With it right now, it's 5% off of its all-time high. The reason I shine light on that is if you're going to any other store in the world looking to buy anything, whatever it is, if you're already intending on buying that thing and you see it presented at a 5%, 10%, or 20% discount, it's something you already want, just at a better price and a better discount for your budget. So the same way of thinking applies in the stock market. And with that said, Travelers is 5% off of its all-time high. It's basically been in the same spot that it's been in over the past 6 months. And they too pay a 1.6% dividend. So all of these stocks I mentioned in this episode, excluding Carvana, do pay a dividend. I'm a huge believer in dividends. Of course, the real bread and butter of the stock market is buying low and selling high, as plainly said. But it is that dividend income that creates an income for you over a longer course of time. I would also like to add, you could buy these stocks for the long term. I am a big believer in long-term investing. So yes, I do day trade as my day-to-day job, but I also have a stock portfolio of long-term holds that I intend on holding these positions for 10, 15, even 20 years. So all 5 of these companies that I mentioned in this episode are companies I would hold over the long term. I would also trade them as well over the short term. I do think they are going to appreciate in the near term. So for all of these reasons, I'm a buyer of these 5 stocks. And again, as I said at the start of the episode, you can invest in these stocks at any budget. So let's say you have $100 that you could put into the market this week. I would take that 100, break it into 5 $20 increments, and put it into each of these 5 stocks. Thank you for tuning in. You could follow me on Facebook, Instagram, and Threads, and all episodes are available on YouTube, Spotify, and Apple Podcasts. Thank you.